Hey folks, CJ and I are super excited. Tom Lee is just coming by here at the booth at Bitcoin 2022. Yeah, he spoke yesterday about Bitcoin. And as you guys know, Tom Lee is the co-founder and head strategist at Fundstrat. Tom, great to have you.
Yeah, great to be here. There's a huge turnout for this conference, isn't it?
Yeah,
it's incredible. Yeah.
So what were you talking about yesterday?
The panel I was on valuing Bitcoin, and it was a great panel. It was Brian Estes from Off the Chain Capital, and I don't know if people are aware, but he had the best performing crypto fund last year. And Mike Belshi from BitGo, and then Jan Van Eck, Van Eck's Equities.
So what's the conclusion for Bitcoin? You're still bullish?
Yeah, I think Bitcoin is stuck in a range right now, just the way the NASDAQ's been stuck. But the underlying use case is growing. The regulatory environment's gotten more friendly. And then I think from a investor perspective, activity is down, but that's because no one's really trading stocks and crypto. But once we get through, hopefully we don't crash as an economy, but once we get through some of this Fed tightening, I think that's when stocks recover, and that's when Bitcoin, is going to make new all-time highs.
What other exciting developments do you see in the crypto market?
There's a lot to like in crypto. I think that you're one, just looking sort of from a higher level, stable coins and, the idea of like central bank digital currencies is really bridging the idea that, crypto can store your value and your money, not just store yourself as a hedge against calamity. And then there's a lot of great things happening on DeFi and payments, and so I think there's a lot of great things happening, and finally the technology is getting to a level where it's going to surprise and delight people.
I'd love to ask you about Bitcoin and performance in a rising rate environment. Something that was just recently published was a report from Dan Moorhead, the CEO of Pantera Capital. He talks about how Bitcoin is one of the more desirable assets to hold in an actual environment where you have those rising rates. What are your thoughts on that?
That's a great question. Bitcoin hasn't been around long enough for us to sort of battle test it in a rising rate environment. When I think about rising rates, it means two things. One is the cost of capital is going up, and the second is that financial conditions tighten. So if the cost of capital goes up, Bitcoin is a competitively more attractive asset to own because it's not affected negatively by inflation. So in other words, Bitcoin still captures value if rates go up, whereas bonds, of course, are terrible. And then if cost of capital goes up, it means mining gets more expensive. So then hash power becomes more valuable, but energy costs are going up. But of course, that increases the value of the Bitcoin security. And if you think Bitcoin is priced on a price to book method, like cost to break evens, it should make Bitcoin more valuable. So I kind of get the logic that rising rates makes Bitcoin more attractive. But we won't know, right?
On to one of your favorite themes, or actually your investment theme, beef. Tell us a little bit about beef.
Yeah. So our strategy for our macro clients is beef, which is Bitcoin and Bitcoin equities, energy and FANG. They all are kind of been firing at different times, in terms of outperformance. But the first two I think are really the most interesting, which is owning Bitcoin this year and Bitcoin-related equities. They didn't do great in January, but February, March, and April they've been outperforming the market. And the reason I feel so good about owning something like Bitcoin and the Bitcoin equities is, one, the addressable market is huge. There's not a recession that's going to reduce crypto. And we know corporates are still a new market and institutions are. So when they get involved, it's a growing market. So you can't find another industry with this type of growth roadmap. And the Bitcoin equities, they're scarce. There's really in size only Coinbase and Silvergate and some miners. And so I think there's going to be interest for investors to find exposure. That's why I think the Bitcoin equities are interesting.
I know you can't talk about individual stocks, but Silvergate, its business model, do you see anybody replicating that?
Well, they have a big advantage. But over time, other banks are going to do what Silvergate does. I think at the core, Silvergate's done a great job with their Silvergate Exchange network, which is a really good way for people to on-load and on-ramp and off-ramp for dollars into crypto. They actually don't charge exorbitant fees. Essentially, it's free to use their messaging network. But that's a network value asset. They have a big advantage over others. And so over time, there will be other banks competing, but Silvergate has a big lead. But it's hard for funds to actually have banking access. So Silvergate is really one of the few.
NFTs. There's an NFT of yours around. So what do you think about NFTs?
Well, NFTs I think have already proven themselves to be a really interesting use case for digitally native assets and storing and showing really that there's true value captured in scarcity of a digital asset. The zombies, which you should talk about, it's a fun project.
It's a fun project.
Yeah. The challenge is going to be really NFTs that are connected to the real world, and I think that's where innovation will happen, but it's obvious, there's a lot of challenges. I know there's a lot of people trying to solve issues there, but that could be a source of innovation when it gets done right.
Going along with the subject of NFTs, I want to ask you about the Metaverse and GameFi. Is there anything interested you in that particular space, or do you find that the valuations are somewhat inflated at the current time?
Well, in the crypto world, everything has been rated higher, so nothing is the value. But gaming's huge. I mean, gaming was really one of the first places where people were very comfortable trading digital goods. We know there's a huge generational story behind gaming. I mean, gaming today is bigger than Hollywood, basically, and the Metaverse is a natural extension. I would say that's the Metaverse in its current iteration isn't that immersive, and that's what's going to change and make it more useful. But would I be surprised over time if in the next 10 years, 75% of all GDP growth is digital, including Metaverse? I wouldn't be surprised, and that just means that we're not going to care about regional currencies anymore. We're going to care more about crypto and digital money.
Wow, 75% of GDP growth?
I think it's maybe conservative, because in the last 10 years, over 50% of all global GDP growth was native digital. Financial services, tech, healthcare, a lot of the healthcare delivery was digital, like innovation and drug discovery. So in the next 10 years, if it's 80% digital, that's roughly $30 trillion of digital GDP growth. And how much of that will be funded by using krona, yuan, euros? It's all mostly going to be funded by digital money.
Last but not least, Bitcoin versus Ethereum. What do you like most? Better?
I'm going to choose C, both, because they really serve different markets. Now, Ethereum's actually outperformed, but for logical reasons, because the utility has gone up a lot with NFTs and so much value staked in it. But there's a lot of things happening on Bitcoin to improve its utility. There's even projects like trust machines that are layer 1 blockchains, but really settling on the Bitcoin blockchain. So I think Bitcoin is still the most secure network, and there's things happening that might speed its utility.
To the market, last question. I know you basically have stated lately that you thought we might have, or you think that we might have the lowest in for the year.
Yeah.
We might be slightly going up towards the end of the year. Anything which could change that view?
We're in a really tough spot for an investor because we know we're at a turning point. Like, inflation has picked up and the Fed's tightening and we got a war. And the dilemma we all have is how much has been discounted by the equity market. From what we can tell, I think we've already discounted the 66% chance of a recession. We've already priced in a huge tech bear market. Institutional investors have raised cash at levels you haven't seen since April 2020, which was when everyone thought the world was ending. So the world is positioned for calamity, and if it doesn't happen, stocks have made their low for the year. I think it's over a 90% chance that February 24th was the low for the year. So I'm confident, but I don't think that means stocks go straight up. It just means we could be flailing for a few more months, and then second half is risk on. But again, I think the lows hold.
Well, folks, with that, we're going to leave it. Tom has to move on. He's got other interviews to attend to. Tom Lee, co-founder of FundStrat, thank you so much for coming by.
Yeah.
And see you tonight. Bye-bye.